Good morning, good afternoon, everyone. My name is Russ, and I would love to welcome you all, as always, on our Friday update here on DataDash. This week has not been particularly heavy in the macro world. However, the positive effects of the lower unemployment claims that came out yesterday has been completely erased by the poor GDP quarter-over-quarter growth, and that has definitely affected the markets. So, with all that said, let's go and dive, seeing how this week is unfolding for us. Of course, we're going to go through Bitcoin and primarily dominance and my altcoin plays, where I am looking forward to scale more into crypto. Total 2, total 3 including, and we're going to go through some of the earnings because this week is a very particular week and multiple companies are reporting the earnings. So I would love to showcase where I am happy to buy and where is my invalidation points. On top of that, we're going to cover some of my favorite plays here on the sector that we have not yet touched, and then also provide you updates on previous setups, including cannabis and silver. With all that said, let's dive into the charts. Some of you have been asking me in our Telegram group, how do I look at the charts and what is my thought process? So I'd like to quickly elaborate on that today. First, I normally start with the yields. Unfortunately, a lot of traders do not consider yields in their game plan, and yields are always preceding majority of the stock moves. Here on 2-year and also 10-year, 20-year, the picture, it is quite similar. I mean, on 2-year, it is so far very hard for us to break those 5% level. And that means that investors are still not in rush to reallocate their portfolios into the bonds, and that is providing us a little breather into the stock market. On top of that, as we have highlighted last time, guys, for those who watched my Friday video, you remember I was telling you that this volume of put to call ratio is overextended and weeks at 20 on the last Friday is not sustainable, and we're going to have the rebound. And that's exactly what happened with the stock market. We'll see S&P and Nasdaq in a second. On top of that, one of the charts that I love to use, as you remember, is Australian dollar to the Japanese yen. And higher the Aussie is printing against the yen, more risk on attitude we are seeing on the market. So that last Friday hammer candle represented the market reversal way before the market actually has started to reverse. That is why you need to keep in mind that the forex market and the bond market are so much bigger than the equity asset class, and this is why those liquidity flows can provide you a very useful hints on towards how the market would react. By market, I mean stocks and crypto, which are way smaller. So if you're going to look here on Nasdaq, you would remember that last Friday, despite everything, we still closed in red, but the risk on attitude have been building on the market. And this is why we had this bounce. Also, the same picture on S&P 500, not just Nasdaq. So we are roughly 2% up from that bounce, and this is very interesting inflection point. Here, on one hand side, we lost our parabolic uptrend. We've been on this prolonged rally for a huge period of time since October 2023, and now we are losing on one hand side 50-day exponential moving average and simply going into the oversold moment when our RSI and our other oscillators, stochastic, MACD, and so on, are reversing, are resetting, providing us the bounce opportunity, purely technical, and then this bounce into 50 days moving average. So what's super important right now to observe is how we're going to react in the next few days into this level. This level is 506, 507 on S&P 500, and this level is roughly about 432 on Nasdaq. This week is not really straightforward because on one hand side, as I have briefly mentioned, we had an advanced GDP quarter over quarter, a huge miss where we actually have been on 1.6% growth instead of expected 2.5 and instead of 3.4 that we reported on the previous quarter. However, the unemployment claims are still coming in line with an expectation, no signs of major unemployment spikes, and it kind of signifies that the economy is growing just slower than it was expected. So for me, in order to see how we gonna act on those weeks where the data is slightly conflicted and there is no fundamental guidance, I would look first on what is the next data point when it can come. And I see going into the Forex Factory calendar here that pretty much until Wednesday, May the 1st, where manufacturing PMI and federal funds rate and then FOMC statement gonna come. There is nothing pretty much important on Monday and Tuesday, apart of a couple of European and Chinese data points that not gonna affect the American market that much. So how would I answer that question when the fundamental data is so conflicted? I still have 5 days before the red folders would start to affect the markets. So my decision making here for the next 5 days, my game plan would of course affect crypto and stocks behavior, can be purely technical. And in this case, I'm going to my favorite chart that shows me risk on, risk off, current attitude on the market is Euro USD. For those who missed my previous stream, I'm gonna put the link here to remind you of the PO3 setup. The PO3 setup in this case would indicate that this deviation below 1.07 level of demand was the manipulation, and after our accumulation in yellow, manipulation in red, we're gonna have the distribution in green, and with that potential bounce in euro in order to take the liquidity from all these previous highs, I am expecting the drop in the DXY. And this is also something I showed you last Friday. I said, despite the DXY is accepting here behind this super important level of 105.8, I am still expecting that this is the deviation and we can have a very probable setup where we accept into the previous range. So if, in my opinion, the DXY starts to sell off, the sell-off would be very significant. The sell-off can bring us into the market structure break where we're going to take this previous lows, this previous lows, this previous lows, and that can bring us to lower 100. And this is why this arrow has been here from last Friday. And also for those who missed my short yesterday, I already provided that game plan. And this is exactly how the DXY has been playing out since then. Of course, we have this line of resistance, so I'm not saying that it's going to happen today. We might bounce back, retest 105.8, and only then start to accept back. But this is something extremely important for me where I would watch to add to my positions, because if dollars start to correct, none of the institutional investors would like to stay in cash, because with the yields not being able to break through 5% and with the dollar correcting against other currencies and with the overall fundamental attitude of currency debasement and the money printing around the world, the commodities and certain stocks and other asset classes that we're going to cover today, primarily lithium, in my opinion, gonna significantly benefit. I understand you want me to help you answering the question, what does that mean for my crypto? I am on the sidelines or I am fully in. Shall I sell or shall I add? So let's dive right now into the Bitcoin chart. First of all, you remember those lines that we've been signifying here weeks ago. They are playing out very well. This is the line of supply that we were not yet able to break since our geopolitical escalation between Israel and Iran. For those of you who has missed our Friday last week stream, I'm gonna keep the link here because it is very important to go and check the setup of absorption or exhaustion or lack of participation from the previous week. And with that said, I would like to go right now into Coin Analyze and see how crypto looks like here. So on one hand side, I see that both spot and perpetual futures have been on the negative CVD, and they are starting to form the CVD divergence, because despite a very active selling, the price is refusing to go down more. So you see that starting from yesterday, we are forming those divergences. On top of that, the funding has been going down, and that means that more and more shorts are opening entering the market. More and more shorts are opening. So looking on this open interest chart, I nevertheless could conclude that these particular bounce that took place here have been driven not by an active long participants, but potentially by the shorts closing here into that bounce. So what I would like to see is the definitive and assertive open interest increase that would bring us above 65,000. And before we are breaking 65 or 65.2 for the full confidence, I am not interested in any altcoins. And why would you ask? Well, because if we're gonna look on the Bitcoin dominance chart, I see a clear reversal pattern here from the same zone. Guys, you might come to any video of mine and see that those lines have been here since the very first video of mine on the channel, and nothing has changed. Nothing has changed. I still would expect the Bitcoin dominance to revisit the levels of 58 or 60%, and that can be quite painful for alts in the short run in case we're gonna have the dip on Bitcoin. And now, looking once again on the Bitcoin chart itself, I would expect, since we have the huge amount of liquidity sitting below those wicks, I could expect that we might revisit last week low around 59,000. I nevertheless would also expect that a lot of participants are expecting the same thing. So we might have bids in the area of 61.5, 62. That's where I personally would bid, with an invalidation around 58.3 thousand. So I would like Bitcoin to grab that liquidity from here. That can also coincide with taking those prior lows and then taking another attempt of breaking through 65 or 65.2 that we just indicated on Coin Analyze. Trading and markets are following the fractal structure, and this is why it is all dependent on the time frame. So to summarize, once again, I am expecting, first of all, I'm expecting a slight decline in Euro USD coinciding with the DXY spike. I would say that Euro USD is slightly overextended, and I wanted to retest this order block, this red candle that has formed the market structure break. What does that mean? It means that the DXY gonna spike slightly up to retest this yellow line of 105.8, and that's where I gonna catch the Bitcoin long. And let's put this long on the chart so that you can copy trade me. So something like that I would be looking at. You can see the numbers on the right. You can just pause the video and take them. So something around 61.7 and the invalidation is around 60.5. And if we dip deeper, I'm also open for it. Then I would like to beat that zone, as I mentioned, the swipe of the previous lows. And I would still expect the upside from those levels, unless there is, of course, a geopolitical escalation or some kind of force majeure situations in the markets. And that would also coincide with the liquidation level around 62,000 as per high block capital on the Bitcoin 7-day chart. So I still expect a slight dip down to grab the liquidity, and then correction of DXY and the Bitcoin future pump. When it comes to Ethereum, I am actually seeing a very interesting picture here with the constant spot bid, the blue line, despite all the spot is buying, and I see relentless selling from the perpetuals. And in my opinion, at a certain point when the picture starts to look like that, I see that there are much more short liquidations. And in red, in the bottom, you see that cumulative volume delta starts to approaching the levels when it's easier for a market maker to grab the liquidity from the upside than from the downside, because for someone in the market to buy, someone needs to sell, and for someone to sell, someone needs to buy. So if there is a relentless amount of future selling on the market, then obviously the market maker, in order to help those sellings to happen, has to be long. When you are selling into the market, someone on the other side of the market has to buy, and it cannot be me, because in this way the bid and ask will have too big of a spread. So most probably that is the market maker, whose job is to assure the small spread between the bid and ask, and that is why they are on the other side of the liquidity providing. So to make it simple, when I see the huge red bars like that, I am starting to think that the reversal can come sooner than later. And on top of that, as I mentioned, of course, spot bidding here, despite all the negative news related to Gary Gensler and SEC postponing or declining the spot ETF for Ethereum and so on. And, negative news and neutral market, this is bullish. So I'm actually looking forward to have the following on Ethereum. I would like to bid the level of 3000, with my invalidation around 2900 or 2850. I really think that on Ethereum, the bottom so far has been in. So I would be looking for something like that. So this would be my Ethereum trade. You can, of course, as always, pause the video and see the levels. But as I mentioned, for those who is, for example, watching from the mobile phone and it's hard to see the smaller numbers, 3000, 3010, and potentially the level of 3050, because I am a little bit afraid to be front run. And my invalidation is 2870. And my target for that trade is all the way into that zone of supply, into 3600, 3700. So in my opinion, quite a good trade, quite a good risk reward. On top of that, if we're going to look on the relative strength chart of Ethereum against BTC, we are finally, and that was my expectation, we are finally start to print the market structure break, accepting above this previous highs. So what I would like, of course, for us to happen is to not lose that red rectangle and to start to reverse from here on the way up into those volume candle where huge number of transactions have happened. So for me, that we first need to go to that direction. That liquidity always, guys, signifies the direction for me. And once the momentum starts to kick in, you remember how many shorts, perpetual shorts, have been entering on the strong spot bid. Obviously, those shorts would start puking level after level, level after level, and we can have actually a nice and prolonged short squeeze into next week. As a small reminder, everything we're talking today is slightly short term. It's until the 1st of May. As 1st of May, FOMC can bring huge volatility into the market and change of game plan. So please stay tuned. I would make 2 shorts next week. Oftentimes, I'm also seeing people, especially those who just start their journey, they try to maximize their gains and they try to trade with their entire liquid net worth, the entire portfolio. In my opinion, that's by far not the best choice, because if you just think of Ethereum prices of 5 years from now, well, you need definitely to have an allocation. So what I personally do, I lock up a certain amount. And for example, on the sites like crypto.com, you can get the earn yield on top, which is like 5 to 7.5% a year. And when you actually need to go and spend the fiat, then you can apply to one of their cards. In my opinion, they're actually quite good, because you just lock up between 350 euro to 3,500 euro, like whatever the program you prefer, based on if you want to have an access to airport lounges like Netflix, Amazon Prime, whatever. Really bunch of cool perks. And then you actually get the cashback on top. So that's lock up several hundred or thousand euros. They pay off quite fast. I mean, depending, of course, of how much you spend, but the rewards program are quite good across all the providers, what I've seen so far. So yeah, I recommend just checking their conditions in the link down below. And do not trade with your entire net worth, because right now the times are quite choppy. For those who have seen my previous streams, you remember that one of my favorite plays, and I did not change my mind, it is PayPal. Why PayPal? Because we are going into the earnings on the 30th of April next week, and everything I see on the chart is Adam and Eve or cup and handle, or in other words, we are trying to eat up this liquidity that is so far serving us as a resistance. But if we are looking like a little bit more closely, we see a nice break and retest with the good volume. So we are trying to break out of this wedge. I am not really trading patterns much, but I also just simply looking on the gap in prices would say that $72 for me is pretty much programmed, 77 as well. I'd like to put a link in the description for those who've missed actually my video on PayPal, why I think it's a great play. $5 billion that they have in their free cash flow, they're gonna allocate into buybacks. For me, this is a no-brainer company I'd like to own, and I already have a large position. And on top of that, I'm adding 2026 $95 calls. What I am also happy to see on PayPal is the fact that we are in the positive uptrend, holding both 200-day white line, which is 200-day exponential moving average, and also 50-day exponential moving average, which is in purple, is starting to cross over, so-called the golden cross scenario. Once again, this is not something I would trade, but seeing in which kind of downtrend PayPal was for the last several years, these, in my opinion, would provide a nice technical reversal opportunity. So we already start to print higher lows. The only thing which is missing here is an acceptance above the red rectangle and the move towards 72 and 77. Once this is done, it will be clear for the market that PayPal is in an uptrend, and a lot of liquidity would seek its way to be allocated in that stock and in this company that, in my opinion, has all the way the room to go to 120, 140, as I mentioned in the video. So I'm not gonna spend so much time on PayPal. Let's go into other value plays. Of course, I cannot disregard the lithium miners and producers. I see that Piedmont, for example, heavily discounted from the recent 65 all the way down to lower 10 range, can actually potentially print the bottom here. That is why we actually together entered with the tight invalidation in the Telegram group. I would say that we still can dump another 5% from here. And we can also lose the range. Let's be open for all the opportunities. But for me, the fact that we have swiped this previous low and we start to bring multiple divergences on the daily time frame can provide us a good risk reward here to enter today. Tight invalidation, and the target is these recent highs. Then once we start to accept above the range highs, I would consider the new shoot to the previous levels. Well, it's a bit too early to say that, but just a bounce back to the range high is already 40%. That is not so bad for the ESG narrative, because lithium, despite of course the suppressed Tesla results and overall the economical outlook is not the most positive, when you see a great producers at 80-85% discount, it's okay even for a technical bounce. I'm not saying that an absolute bottom is in. Maybe we bounce to the range high, and that's how trading works, and then there will be a huge number of buyers, like you've seen the last week, stepping in to get rid of their shares, and in this case we can bounce all the way down. If you are looking for a little bit more secure play outside of Ghana, Africa, where Piedmont having most of their mines, I would consider Albemarle. Albemarle is an international company. It's a part of S&P 500, and we are technically in a very similar setup here. I am not expecting such a huge returns. Instead of 40%, we are speaking about higher 20s. But this is also very good, in my opinion, considering that we might start to form the bottoming formation here. So I would consider, based on your risk reward, to enter either or with the tight invalidation below previous lows and the target initially in the range high. In the case of Albemarle, that will be something around 150. I've been also visiting Chile last month and been at the production facilities of SQM, Sociedad Química y Minera, and this is the Chilean producer that is normally known for one of the cheapest lowest cost of production. So they are, in that case, not providing such a huge bounce, because if those who remember my silver video, I illustrated there how the valuation of the company is dependent heavily on the cost of production. So we can go for 20% on SQM because their cost of production is already low, and that is even less riskier play. For those who has been asking me if I'm still in Warner Brothers, yes, nothing changed for me, despite I'm not particularly happy that we are contracting here together with my friends. We are calling it sometimes the raccoon pattern because it kind of reminds me the body of the very nice and lovely animal, where we start simply print those lower highs, but we cannot still swipe the lows, and then the swipe happens in the form of accepting in the previous range. So this is something to keep in mind. On one hand side, I am not a big fan of the tight automatic stop losses, because this is also very possible that we're going to swipe the liquidity here and bounce back. On the other hand side, I would also not keep this position open for too long in case we swiped the previous lows and cannot accept back into this previous range of $8+. Then I would manually, happily take a loss and cut that position. But for me, still with the price to earnings ratio of 4, which is unprecedentedly low against the S&P 500 market, for example, where we are at higher 20s, I would say. This is like still amazing risk reward for me. And that, of course, would be extremely unfair to cover lithium today and not to cover my favorite asset class, which, as you know, is silver. So looking on the silver charts, I see that we are bouncing. I indicated in the Telegram group, maybe let's put a screenshot here, 26.8, guys. That was the bottom I highlighted. How accurate is that to the dollar, to the cent even? And right now, what I'm expecting the bounce all the way into 32 zone. The junior minor ETF, which I'm not a big fan of because I don't like the composition of it, we're gonna have way better allocations. And please go once again check my silver video for those who missed. But this silver junior ETF is strongly holding the 800-day moving average, the 50-day moving average is curling up above 200. So I would consider that we're still in a very strong parabolic uptrend. And moreover, the relative chart of silver junior ETF against the silver is, in my opinion, soon gonna break out from that level that we have not seen ever for multiple years there. So in my opinion, you are extremely lucky if you've seen my video about silver, and if for certain reason you have a friend who has not, please share. It's not because I want to promote my video, I just really, it makes me happy where people can make sustainable life-changing gains. And in my opinion, where we are right now have backtested this trend line. Simply the levels where we're going to be a year from now are at least 100% above the silver level. So if the silver will be, let's say, at $36, then the minor ETF, this boring, inefficient minor ETF, is going to be 100% above where it was. And on top of that, of course, the junior miners are going to perform even better. So when we are looking on gold to silver ratio on the daily, the picture is also very straightforward to me. The picture is clean as in the textbooks. We printed the high, then we could not reclaim that high. We had a market structure break, and we had this lower low. Then we had a lower high, lower low, lower high. Now we lost both 200-day moving average, 50 moving average, bouncing, touching it from the bottom, bouncing towards, in my opinion, 40. And what does it mean, 40 for silver? Humbly, that means that silver is 40 times cheaper than gold. And that probably gonna bring us after the certain swipe. I believe there's gonna be a correction in stock market. So we're gonna swipe this low, maybe not as low as 24, maybe 25, 26, and then the move towards 48 to 60. Easily, I can see easily silver at around $50 by the end of this decade towards 2030. And this is why a bunch of our junior miners that we have highlighted in the previous videos are easily going to do 5x from those levels just to come back to where they were a few years ago. So with that said, please, once again, don't sleep on silver. If you missed that video, come check it. With that said, if you have any question, please put it in the comment down below. And if you found my commentary valuable, please also don't hesitate to put the like. That helps the algorithm. And I'm not doing it for the selfish reason. I just really want the more people do not sleep on the silver trade and lithium trade and a bunch of other value plays that we're gonna take. Because at the end of the day, I'd like to see more free and creative people that are doing what they like and not being stuck to 9 to 5. In any case, with that said, I wish you all a great end of the week and stay tuned. Much love.